Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So what we're looking at here is the 4-hour price chart. Each candle on this price chart represents a 4-hour trading period. And what we can see here is that the current trend wave movement to the downside continues to force prices lower in the downward direction. So currently what we're looking at here, if we sort of move in a bit, would be a trend low recently that is coming in at $19.48. Of course, this has not yet broken below the prior spike low, which was developed during the September 11 trading session, which came in at $19.31. However, what we can see here is that the candle body on this time frame sort of pales in comparison to the spike low and the lower wick itself. So overall, what occurred here was that the trend movement here created a price gap in the downward direction, and share prices were becoming extremely volatile at that point. So I do think that this more recent trend movement lower here is more significant because what we're starting to see now are closing timeframes that are lower in nature. So we didn't exactly break through this prior spike low, but we are seeing lower closes on the 4-hour price chart, which are lower than this September 11th trading period. So overall, this is a chart that looks extremely heavy at the moment. So what we're going to be doing is looking at some specific price levels on this chart so that we can hopefully identify some profitable trading strategies going forward. So as things currently stand, the main level to watch to the top side currently comes in at $21 per share. This would be the price high that has now been tested on several occasions. Most recently, we can see that this was tested during the 11th of September. And most recently, this was tested during the 13th of September. And as we can see here, this has now created a very formidable level of resistance that has become increasingly difficult for share prices to overcome. Overall, what we have seen here is a fairly predictable price movement to the downside because even as we were sort of reapproaching this resistance zone, what we started to see was a series of candlestick formations where the bodies on these candles were becoming smaller in size. So what this tells us is that we're continually really reaching a period of indecision in the market as we're reaching into a resistance zone. So as this typically occurs, you would expect to see share prices start to reverse at that point because this is much more likely than a forceful breakout to the top side. If you were likely to see a forceful breakout to the top side, the most likely event that would be occurring here would be a series of longer bodied green candles. This did not occur, and we're now seeing share prices now move lower into these sub 1950 levels. So from the positive perspective, what you can say here is that, the share prices themselves have not reached these new lows below 1931. So that is slightly encouraging. But the problem here is that this 1931 spike low developed with a candle that has a very long wick. And now the bodies of the more recent candles have actually closed lower than that prior trading period. So these are negative signals. If we look at the indicator reading here on the 4-hour price chart, we can also see that this recent upward movement in trend momentum has now been broken to the downside. So we can see that here. The relative strength index, which is the purple line at the bottom of the price chart here, is currently trading below its exponential moving average. But we are starting to turn up here a bit, and it is now possible that we could see an upward price movement that sends the RSI back above its own exponential moving average. If that were to occur, we could start to look at this trend momentum reading a bit differently and possibly suggest that share prices are ready to start moving higher. But as things currently stand, we would need to see a bit more evidence on the price chart itself and within the indicator reading in order to base that type of bullish outlook. So longer term, clearly the trend momentum remains focused in the downward direction. And with the recent inability for the stock to overcome that $21 level, overall, this is a bearish picture that is being created by the stock. So in order for us to really see some positive movements higher, we would need to see some upward momentum here that at the very least sends share prices back into the exponential moving average cluster. As we can see here, this yellow line continues to descend. This is the 20-period exponential moving average. And what this tells us, it's giving us a downward price slope. So what this tells us is that share prices are now likely to start encountering resistance levels at lower and lower levels. At the moment, as we can see here, that yellow line is coming right into contact with that $21 level. But if we continue to trade below this level, that moving average is going to continue moving in the downward direction. So the worst case scenario, in my view, what would be the worst possible outcome at this point would be for this exponential moving average cluster to move right into this 1950 area. If we were to see share prices trade lower, we could start to see, the exponential moving average cluster move into this region. So, as things currently stand, this $20 level is important. We're sort of oscillating around there at the moment. It is going to be important for the stock to be able to overcome that level, because I do think that if we spend a prolonged period of time sub 20 in the teens, I think that that's going to start to change sentiment for this stock going forward. And I think that people are going to start to view any movements into the 20s as being less attainable or more unlikely. So that is something that could weigh on sentiment here going forward. If we did see a share price break above the $21 level, the best possible positive outcome that you could see here, the best bullish outcome that you could see, would be an event where this price gap starts to be filled. This was the price gap that started to develop after the most recent earnings report was released, and as more time goes on, it's going to become more difficult for markets to fill through that gap and generate positive upside momentum, because as time goes on, more and more of those orders that were previously parked here are going to start to be closed. They're either going to expire automatically, or they're going to be manually closed by people that think that share prices are going to be seen at lower levels, and that lower price levels should be used to establish those positions. So, there's a lot working against this stock at the moment. A clear break below 1931, then starts to retarget this prior price low at 1873. This is the August 5 trading low. So, there really isn't much holding share prices above here, and this foothold above the $20 mark is starting to become shakier as time goes by. So here's the current stock market analysis for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.